Well, hey everybody, I hope you guys are having a phenomenal weekend and had a great week trading. Just real quick as we're kicking off the video, I apologize in advance if any kids come in screaming, if any dogs are barking. We're out camping by the lake, of course, this weekend, and there's a lot of action going on here, and my office is only so far away from all the action. So I apologize in advance there, but we'll try to keep it to a minimum as much as we can. So we got a lot to talk about here in the weekend video, and first things first, starting with the weekly chart. As we look back at the weekly chart, we know we came up to the resistance that I'd warned you about several weeks ago. We pulled back to it, and we just could not take off from it, making it turning the resistance into a support level. So, that's one of the beauties of technical analysis. It's just very objective. It's not emotional based, and and then of course with that time, we went ahead and had the reverse IRB as well. So we're in a downtrend, and we were 45% or more off the high in the uptrend, and so sure enough, it broke right down through them. You recall I've walked through a lot of the different trades and trading that we had focused on the last couple of weeks. So breaking that down into the daily basis here, same thing, different view. We went ahead, we pushed up, we pulled back to that, trying to make it a support level, the resistance level, and we just couldn't bounce off there. So sure enough, we broke through that, we pushed back up towards it, and then reaffirmed that it was still resistance, and down the hatch it went. Every time we're getting these little push-ups, everybody gets all excited, like here's the time to buy, here's the time to buy, we go ahead and we come right back down, which really brings me to a couple of points. As I've mentioned repeatedly, my focus is not really on the individual stock plays. I will talk to you if you are interested in individual long-side stock plays, not inverse ETFs. We'll talk about that in a few minutes. In general, the inverse ETFs, though, have been the better bet from my perspective, especially one that you've heard me talk about repeatedly, and that Ted's traded that, the SQQQ. That one's been going up nicely while the market was, coming right back down. And so, and then the strategies, I just had done those classes here over the last couple weeks. Everything from the TRPs and going right to target 2, breaking through target 2, pulling back up, and then those become runaways like happened here, to like the stochastic spike trading opportunities, to the IRB and reverse IRBs, and that has just been such a blessing to have those trainings take place, because repeatedly we're seeing those happen now the last couple weeks. So I hope you attended some of the classes that I did, that were absolutely free, and we're able for you guys to come watch those to get some, updates on things like the stochastics, the IRBs, the reverse IRBs, the TRP breakdowns. That's, an actual program of ours. We did the class alongside of it. So with that being said, here again on Friday, the strategy from my perspective right now, as I've just mentioned, I'm focusing very heavily on short side intraday trading, going home flat, and sleeping like a baby. That is, my focus right now. Like I said, from a swing trade perspective, there's only two ways from my perspective, is the inverse ETFs like the SQQQ, for instance, or the individual stock picks, which we'll talk about in a few moments. So with that being said, here we're seeing where the market was coming down, we would have these classic IRBs and the reverse IRBs in the downtrend, breaking down below those, continuing to open up additional opportunities. And for those of you that went through the training a couple weeks ago but didn't quite remember all, where is this one, is that one, remember that with wealth charts, that's built in, and you have those. So it'll fire off. So like right here is an inverse ETF. Here's a classic ETF. My apologies, IRB, and I've got so much I want to share with you guys today, as you can tell. The classic IRB, the reverse inventory IRB, the classic IRB. So you can see these were firing off over and over and over. So you don't have to even identify the bars. It'll just fire off a dot once one of those things has been identified, and just down the hatch it went over and over and over again. So I hope you went ahead and took a lot of notes from those, because I can tell you that I'm very focused on IRB and reverse IRB moves, in addition to resumptions, post-stochastics, and some of the other training that we've done for you, looking for those runaways, right? Like with the TRPs, and of course the ITPs, kind of a culmination of my life's work. So not to focus on those too much today, but to really just focus on the classic tools that I went in and did the free trainings for you guys on the last couple weeks, are just really, really powerful really following through. A couple other updates here. Well, while we're here, let's just take a look at crude oil. So crude oil, you recall back weeks ago, when we went back to the sell side here, I went ahead and just said, hey, look, not interested in crude oil. And, sure enough, that's, still, where I'm at with it. There's just too much overhead. We're still on the sell side, so it's not a fresh opportunity for reentry for me personally as I see it there. And then gold, same thing here as we take a look. You guys recall, I'm just not excited about gold right now. And I know there's a lot of gold bugs that are like, buy gold, and that's fine. I don't want to take anything away from them other than from a timing perspective. This isn't the right timing from my perspective here. So I'd like to see some technical buy signals to go along with all the fundamentals that people are telling me about, because I don't want to be sitting on dead money right now. I want to be sleeping like a baby. So a couple other things as we look at like sectors. So you'll notice here that sectors is still, oil and gas, utilities, things of that nature. I told you I was very interested in utilities weeks ago, even more so than the energy plays from my perspective. And you can see that even like right here, PCG, top one, utility, plenty of oil and gas in there, by the way. But you'll notice that, there's some good runs still to be had in some of those utilities, just like there was early on with the oil and gas. So those sectors are still some of the most interesting. Industrials have also cropped up as well of late, so we'll start looking at some of the industrials here in some of the future videos as well. As we look at like the WSI scanner, you'll notice SQQ is ranking up there pretty high. And then finally, as I mentioned earlier, if a person's going to be looking for swing trades right now, I'm not going to really be looking traditionally like I tried to find things on like the NASDAQ 100, S&P 500, things like that. Right now, to really find some more interesting opportunities, really got to expand out to like the Russell 2000 and put them up on Wealth Scanner to find some of the most interesting opportunities. Like FMTX here, for instance, had been going up very nicely here for weeks, as you can see, before it had the big gap up. So lots of great entry, re-entry signals taking place there. So there are isolated opportunities, typically going to be found right now, not like the NASDAQ 100 and that, but more like the Russell 2000. So if you have Wealth Scanner, if you have Wealth Charts, you got to go to Wealth Scanner, flip it down to Russell 2000, take a look at some of the things that are there. Okay, so but bringing it all back full circle, the real theme here is there are a lot of opportunities with a lot of the trading strategies that we taught you here, just even in the last few weeks, and that's what my focus has been on, and those are continuing to offer some of the best opportunities in this current environment, since we have all this resistance that's on top of us here at this point. There's more and more technical damage continues to pile on until we get back up above this area and make it actually support. It's going to be kind of a tough go for traditional long side only people, unless they're looking at inverse ETFs or they're looking at very specific stocks like I was showing you in the Russell 2000 that can sometimes march to their own tune, versus like the NASDAQ 100 where everything's kind of bucketed together in the baskets and they're all going to they rise and fall all together. So that's kind of key thoughts here. I want to make sure I got a video out here for the updates. Hopefully the kids weren't too loud in the background for you guys here. And I'm looking, hopefully that noise canceling mic, it did its work. But I will look forward to going ahead and seeing you in upcoming videos here. And we're just going to keep staying right on course with the things I've taught you. And, that's why I really wanted to reaffirm that, but kind of show you some of the specifics along the way. So have a great rest of your holiday weekend, and we'll look forward to seeing the upcoming videos. Take care, everyone. Bye-bye.